What's up, everybody, and welcome into today's video where we are talking about how to buy a house. Seems like a very difficult thing to do these days. How to buy a house in 2024. It is not easy out there. It's a very slow real estate market. We're going to be talking about why it's such a slow real estate market, but more importantly, what we are doing, exactly what we are doing to buy houses, continue to buy houses. We bought 2 last week. We're in contract on numerous more. We're staying active despite this real estate market being as slow as it is. If you're new to the channel, I am Dave with the Cream. The Cream stands for Cash Flow Real Estate and Money. We are full-time real estate investors. We own and operate and manage a portfolio valued over $50 million. These are rental properties, investment properties, and we have a robust flipping company. We are continuing to flip properties, and we bring in over 6 figures every single month in our flipping business, and we coach other people to set this up the right way for yourself. We've been doing this for a long time, and I gotta say, this is a very slow real estate market. I'm sure you are experiencing the same exact thing out there in 2024. So we are talking about how are we continuing to buy these houses. First off, let's look at the current market in 2024. This was on Yahoo Finance today. The U.S. housing slump deepened this spring. Where does that leave home shoppers, buyers, and sellers? Well, we've talked about this in previous videos, but I mean, everybody's pretty much talking about it. Sellers, homeowners, current homeowners are not selling. They're not selling because they are currently locked in with super low interest rates. Most home sellers, the average interest rate on a 30-year mortgage on an existing home, not a new home, an existing home, the average interest rate nationwide is about 4%. Currently, as it stands today in 2024, interest rates are hovering around 7%. So sellers and homeowners are not interested in selling their property, paying off a 4% mortgage, and then taking out a new mortgage where their rate is now going to be 7%. And prices are at all-time highs. We're going to get into that in a minute, but the median house price, the median home value is around $419,300. It's at an all-time high. So prices are super high. Interest rates are higher than they have been in the last 20 years, really. And sellers are locked in their home. They're not interested in selling their existing property, going to take out a new mortgage, paying 7% instead of paying off their 4% mortgage, and paying an all-time high price. It's a really interesting market, right? So since sellers are locked in and they're not selling, they're not contributing to the inventory. The inventory is at massive lows, and that's what's keeping the prices so high. Nobody's selling. For buyers are on the sidelines right now. Why? Because prices are at these all-time highs, and just like we mentioned, rates are hovering around 7%. Now, when it comes to the home prices, like I said, the median, it's the average home value, the average home price is at all-time highs. However, there are home prices kind of coming down a little bit, and this is in the boom towns during the pandemic. These prices ran up super high in places like Florida, Texas, Georgia, and in these states, we are seeing prices come down a little bit because they ramped up, home builders ramped up construction in these places to basically fill the demand. The demand was so high, everybody's moving to places like Florida, Texas, and Georgia, that the home builders wanted to take advantage of the demand, so they start building homes like crazy, right? And then basically, now that the interest rates are up a little bit, essentially demand is cooling because everything is so expensive, the prices are so high, the interest rates are so high. And what we're not talking about, a lot of people aren't talking about, the insurance is so high, property taxes are so high that the demand is cooling off a little bit, but the builders, they really ramped up their building efforts, so that's cooling prices a little bit because the inventory is kind of ramping up a little bit. In fact, the amount of homes on the market has increased in places like Florida 40-50%. Inventory is still relatively low, historically low. However, we are seeing more inventory come onto the market. It's just that the prices aren't coming down that much, okay? And in these places, there is a lot of new home construction still going on, and that is helping soften the prices. But for the vast majority of the country, home prices are not coming down. In fact, they're at all-time highs. And a lot of buyers out there, they're saying, hey, I'm waiting for interest rates to come down. A lot of people out there on the internet right now, they're just waiting for rates to come down. But my question to you all is this. This is crazy. This is a good question. Will interest rates coming down help or hurt home buyers? Let's think about that for a minute. Will interest rates, if and when interest rates come down, first off, when interest rates do come down, they're not going to come down drastically. I don't know that we're going to see the 3%, 3.5% interest rates again in our lives. We may never see that again. They may come down, but I don't think they're going to come down drastically. And even if they do come down, if you're a buyer out there and you're waiting for rates to come down, is that really going to help you? Well, let's think about it like this. If rates come down, this is a guy, Daryl Fairweather from Redfin. This is what he says. He says, it makes me a bit concerned for what will happen with home prices when rates do drop, because I think it would spur demand without really spurring the supply, at least in the short run. So that's Daryl Fairweather, the chief economist at Redfin. That could lead to some sharp rise in prices. Let's think about this. If interest rates come down, that's going to support more demand. But we don't have a demand problem in this current real estate market. We have a supply problem. The inventory, the supply is low. Currently, demand is outweighing the supply. There is more demand for housing than there is supply. So will a drop in interest rates add more supply? No, it's going to add more demand. And this is something that Patrick Bet-David talked about. I encourage you to check out this video on YouTube and just do a quick search, Patrick Bet-David reverse market crash. He talks about how if and when interest rates come down, it's going to have a reverse market crash. We're used to a market crash, prices coming down 15, 20%, something like that. No, a reverse market crash. If rates and when rates come down, we're looking at spikes in prices because of exactly what Daryl Fairweather just said, right? This is going to fuel demand, not supply. So we're looking at, I believe, if and when rates come down, if you're a buyer who's on the sidelines saying, I'm waiting for rates to come down before I get involved, you could be shooting yourself in the foot, because if and when rates come down, that's just going to make basically sellers ask more for their property. They're going to hike their price. Their asking prices are going to go up because now they know, since the money has gone down, since the money is cheaper and people have lower interest rates, they can afford more. They're not coming down on their prices. Why would they come down on their prices? We're looking at a reverse market crash. If you are on the sidelines currently and you're waiting for interest rates to come down, you could very well, I think a lot of data is pointing to, you're shooting yourself in the foot because prices are going up when rates come down. It's not coming down. Why? How is that going to fuel supply? It's not. It's going to fuel demand. So what do? Everybody. This is what we teach. This is what we coach. This is the thing to do. This is how we are continuing to buy houses. You must do off-market real estate. Straight up. Everything on the market, what I'm talking about on market is stuff that's listed with realtors and listed with brokers. No. End those searches immediately. Stop your Zillow searching immediately. You are not going to find a good deal on Zillow or with a realtor or with a broker, shopping around the MLS or, driving around and looking for a sign in front of somebody's yard. That's retail. Retail. Those are the all-time high prices. We must, and this is what we do, and this is what we coach, and this is what we teach, is we got to go off market. We need to go for motivated sellers. How are we going to do that? Well, we must generate off-market sellers. You must be willing to buy a fixer-upper. You must wrap your mind around the notion of paying all cash for this property. Use private money. It doesn't need to be your money, but you need to be able to not only find these off-market sellers, motivated sellers. We're going to talk about this here. But you need to be able to offer all cash, because a truly motivated seller is not interested in waiting for you to qualify for a loan and sending out the bank appraiser, sending out the inspection. No, if somebody's going to give you a great deal on a property, you got to pay cash for it, because that's going to basically provide them the convenience that they're looking for. A motivated seller does not want to mess around with a buyer who has to qualify for a loan. You have to be like, I have the cash, I'm ready to go. Then a motivated seller is willing to give you a great deal on a property, but you got to be willing and able to, number one, buy houses as is. You can't expect a motivated seller to put any work into a property. They are looking for convenience. They're willing to sell you a property. And we routinely are buying properties, everybody, around 60 cents on the dollar. This happens all the time in our real estate business. This is what we do, right? We buy deeply discounted properties because, number one, we make it extremely easy for the seller. We say, look, you don't have to do any work to this. There's no inspections, no appraisals. We're paying all cash. This is what you need to do. So if you don't have the pile of cash to be out there making all cash offers on as-is properties, you need to be able to find a private lender. We do tons of videos about raising private money. We are experts at raising private money. We are funding all of our transactions with private lenders. This gives us the cash to go out there and make these offers on properties. So we're not paying retail. We're buying properties at wholesale prices because we have access to the cash. You hear it all the time in real estate. Learn how to buy learn how to buy real estate with no cash, no credit. Well, you still need cash to buy houses. It just doesn't have to be your cash. Learn to raise private money. We do tons of videos on this. Let me know in the comments if you'd like more explanation on where we're finding our private lenders, on how we talk to private lenders. This is exactly what we are doing, but you have to go off market if you're going to buy a house in 2024. This real estate market is insanely slow. Prices are at all-time highs. There's no inventory out there. If and when rates come down, it's only going to add fuel to the current fire, because it's going to spark demand, but it's not going to do anything for supply. We must get off market right now. I don't care if you're buying properties for yourself that you're going to move into with your family. What you need to do is be like a sniper. Find the exact area that you want to be in, and then you got to get some marketing data. We do videos about this, lead generation. I'm talking, you get the probate list, you get the divorce list, you get the code violation list, you get people, homeowners who are behind on their property taxes, and you do some marketing to them. It could be direct mail. We are thriving the most with online. Pay-per-click advertising is working extremely well. We're getting a 4 to 6 multiple. For every dollar we put out on our pay-per-click advertising, we're receiving back between $4 and $6. It's going amazing, right? But this is what we teach people to do. The premise is the same. You have to go off market if you're ever going to find a deal that's worth buying. I mean, people are paying too much. You got to get off the sidelines, get in the game, and get out there and get yourself a deal. Do not be one of the people out there, I'm waiting for the rates to come down. That's only going to make things worse here, everybody. So with that, let's get after it today. We're going to be bringing great videos all week. And let me know in the comments what you're finding out there in your local real estate market. Again, in the macro economy, prices are at all-time highs. We need to create our own economy. We need to focus on the areas that we are currently investing in and get out there. Let me know what you're finding in your own market. Everybody, please like the video if you found it valuable, and consider subscribing if you are passionate about real estate investing just like we are. We're looking forward to a great week here, everybody, and I'll see you on the next video.